Is it good news that the Bitcoin ETFs are holding a record number of Bitcoin? We've got long-term demand, very constant demand, that of course supports the price. And since the beginning of 2024, we tended to see only inflows into the ETFs. So Wall Street and traditional finance is buying Bitcoin. And those purchases have a positive impact. What we see over here is a correlation graph. So on the x-axis, we see the ETF net flows in US dollar for every single week since the ETFs got launched. On the y-axis, we see Bitcoin's price performance. So there's clearly some kind of a connection. As more money is flowing into the market through the ETFs, the Bitcoin price tends to go up. As the ETFs rather withdraw capital from the market, the price tends to go down. And so one could make the argument that any demand is good. Because the supply of Bitcoin doesn't expand very quickly, right? The annual inflation is only 0.8%. If we have new demand coming from Wall Street, the price tends to go up. But then there are the purists that say that the Bitcoin ETF and the purchases by people like Michael Saylor through MicroStrategy, they're actually centralizing the Bitcoin ownership. And that's against the ethos of Bitcoin, right? Bitcoin is supposed to be decentralized money that can't be controlled by any single entity. There's also the question about the consistency of the demand. Ideally, we want to have people in the ecosystem that buy and hold over the very long term. Those purists that say that there is no good time to sell Bitcoin, there's only good times to buy Bitcoin. The hardcore believers, the diamond hands, they of course help the price appreciate long term. Now regarding the consistency of the demand, the ETF numbers aren't too bad. We only had a period of 1.5 months where there were outflows from the ETF. Most of the time, at least on a 30-day rolling average, we have inflows. So the demand is rather constant. Or in other words, this chart tends to go up into the right long term. And then on top of the ETF demand, we've also got the Michael Saylors of this world, right? This is now ETF plus MicroStrategy. MicroStrategy only buys, they've never sold, yet the demand wasn't high enough to completely counteract what happened with the sell-off with the ETFs. But still, just in terms of price appreciation, if we ignore that Bitcoin gets more centralized, this is positive for the price development. And so we've got the demand by Wall Street through the ETFs. We've also got the demand by MicroStrategy purchasing Bitcoin regularly. And now we see more and more companies that copy the approach by MicroStrategy. So here we've got the Bitcoin ETF demand. Let's add to that the demand by MicroStrategy. And then we've got the Bitcoin miners that might not necessarily instantly sell. There are 3 more companies that are now copying MicroStrategy's treasury approach. But those 3 companies don't really make much buying pressure right now. It's still in its infancy. Even the Bitcoin miners have more supply than those 3 new companies that also buy BTC. But if there's mainly acquisitions happening through the ETFs and through those treasury companies, why does the price of Bitcoin still sometimes retrace? Why did we see, for instance, the drop from 73K all the way down to 50K? I believe the answer is long-term holders. Sometimes the long-term holders are taking profit. So that was over here when Bitcoin hit 72K. It was also over here when Bitcoin hit 100K. This doesn't seem to be a problem right now. So the long-term holders continue to hold while the purchasing through Wall Street, etc. continues. And so it wouldn't be unreasonable to assume that we can hit new all-time highs fairly soon again in Bitcoin. The market seems to be in balance. It's not very heated. Have a look at this. This is the perpetual futures funding rates. When this is very high, it means that short-term capital that's with leverage in the market wants to have a lot of Bitcoin exposure. So this is when the market is very heated. When this is red, it means the market is extremely bearish. In other words, the shorts have to pay the longs in order to bet on falling prices. So whenever we are in the red, the market is extremely pessimistic. We might want to buy during times like this. Whenever this is extremely green, we might consider selling because that's when people get extremely greedy. Right now, the funding rates of the perps, they are in regular territory. People aren't necessarily super greedy. People aren't necessarily super pessimistic. Again, we are in equilibrium. Really, the easiest way to make money with Bitcoin is to just increase the time horizon of the investment. Bitcoin is, when we look at all of the data, a transfer mechanism from the short-term trader to the long-term holder. Because the long-term holder tends to have a lot of the Bitcoin supply when the price is very depressed, and they tend to have less of the Bitcoin supply when the price is very high. So all the short-term holders, they enter when the price has already rallied. Have a look at this. This is the percent of short-term holders that are currently in unrealized profit. So sometimes short-term holders are in losses and sometimes all of the short-term holders are in profit, right? This is oscillating. Currently, most of the short-term holders are in profit because we're close to the all-time high. But the average of how many short-term holders are in profit versus losses is 57%. So of course, with Bitcoin's long-term appreciating trend, there should be more winners than losers, but it's quote-unquote only 57%. There are still 43% that are in average in losses. Compare this to the long-term holders. Of course, here it's fluctuating much less. And also here 100% are currently in profit. But here the average is 83%, 83 to 84. So only 16, 17% of long-term holders over all of the years are in losses. If you're simply expanding your time horizon, trading Bitcoin, you have a higher likelihood of getting out of the game with some profit. Or in other words, the shorter your time horizon is, the more active you are trading, the more of an edge you need to have. You can't just actively trade randomly. You need to be better than the average market participant, because especially in the short term, it's 100% player versus player. We're not just playing the long-term appreciation of the market, the long-term adoption of Bitcoin. We are trading versus others to figure out where potential market bottoms and market tops are. Now there's an interesting aggregate market indicator using on-chain data. We look at the current price and we compare this to the average price of all the Bitcoin that has ever moved. So we get the realized market cap. We can look at the current market cap versus the realized market cap. If the current price is above the realized price, it means the average market participant is in profit. If the current price is below the realized price, the average market participant is in losses. We can then have a look at those losses and those gains and put this in relation to the volatility. So how much is Bitcoin going up and down? Is it very erratic, or are we rather in calm waters? When we do that, we get this chart, the market value to realized value Z-score. So when the current price is below the realized price, the market is in losses. When the current price is above the realized price, the market is in profit. And when we put those profits and those losses in relation to the current volatility, we get this oscillator. And again, it gives us a good indication of when it makes sense to be very heavily invested in Bitcoin and when it might make sense to potentially take some profit. We are close to all-time highs in Bitcoin. We are not close to all-time highs in the MV/RV Z-score. That score was higher when Bitcoin was at 72K and at 100K. So even if the Bitcoin price was now to go to 120, 130K, we might get close to those levels. But right now, the market is definitely not heated. And again, we want to look at the long-term holders, right? We want to buy whenever the long-term holders are in losses. And the long-term holder realized price is only at 34K. Now, I'm not saying that we're going down to 34K anytime soon. We have seen massive deltas in the past, but there's a good chance we go sideways or just slowly up, and then some long-term holders take more profit. We see the realized price of those long-term holders go up again. And then maybe at 60, 70, 80K, we get another retracement in the Bitcoin price. We always want to look at the current profit relative to the long-term equilibrium. And unfortunately, those extremely great buying prices don't happen all the time. They only happen every 3 to 4 years. And the last time was, of course, after the FTX collapse. The system we live in is truly fascinating. Some people don't know anything about finance, and of course they get robbed because of inflation. Then there are some people that know a thing or two about investments. They might buy stocks and property and crypto, and they feel like they're getting ahead. And of course they do versus the people that don't invest at all. But in the grand scheme of things, within the system, they're still falling behind. Now, because of the ever expanding money supply, because the monetary base is increasing over time, the dollar is devaluing, we are forced to invest. And the current narrative is to simply get this into stocks, We might even be forced to buy stocks via retirement plans. The money supply is growing, and people think by buying stocks we are getting ahead. This is the S&P 500 over time. This is the money supply over time. Both charts go up, but the S&P 500 relative to the money supply isn't really going up that much. This chart starts in 1959. And if you bought at the exact wrong time, you could have lost 75% of purchasing power. Effectively, by buying stocks, we just protect ourselves against the monetary expansion. But what that means is that we're giving away all of our purchasing power to the big corporations, to the big companies, to then use this productively, and we don't have any way to do something productively, right? We're already buying the stocks. The money is gone. I think in the grand scheme of things, this is bad for the economy because capital concentrates in the hands of a few companies and in the hands of a few mega billionaires. It's really monetary expansion that's driving all of the asset returns. Have a look at the S&P 500 relative to the gold price. So now we've got two assets that are impacted by monetary expansion to the same degree. We did not see any outperformance of stocks versus gold over the course of 90 years. We can also take this reference point over here. Again, pretty much no return over the course of almost 100 years. Here is gold relative to the money supply. The chart starts in 1959. And again, can we really say that gold long-term outperforms or underperforms? It's just going in line with monetary expansion. And so it's no coincidence why Bitcoin got all of that adoption, right? Bitcoin was started during the global financial crisis. And during that time, the monetary base expanded extremely quickly in order to bail out the banks. Now, why did the banks have to get bailed out? It's because of fractional reserves. So the bank doesn't have to hold all the money that it claims to have. When you've got $1,000 in your bank account, the bank might only hold $100. They're simply speculating on you not withdrawing all $1,000 at once. If the majority of customers decides to do so, we've got a bank run and the bank is going bust. Just think about what kind of a scam that is, right? Imagine you were to buy a car, but you don't have enough space in your garage. So you tell the dealer, just keep the car at your place. And whenever I want to drive the car, let's say it's some kind of luxury car, a sports car that you only drive on the weekends. Whenever I want to drive the car, I just come to you again and I pick it up. So that's the deal that you've got with the car dealer. And then that car dealer sells the same car to 9 other people. And the only thing that the dealer is speculating on is that those 10 people will never want to drive the car at the same time. You don't really own the car. You only feel like you're owning the car. But the exact same car is owned by 9 other people. And that's the exact same thing that's happening with the banking system. You've got all of those dollars on your bank account, but the bank doesn't own those dollars. There is fractional reserve. It is legalized fraud, and it's simply developed historically because historically there were banks that had claims on gold and nobody wanted to withdraw their gold out of practicality all at once. So in the end, the banks figured out we don't have to hold all the gold. We can just issue the claims. As long as people don't claim their gold all at once, everything is fine. That's now happening with the dollar. With stock investments is that we give all our purchasing power to the big corporations that then use this productively just to escape this hidden tax, the debasement of the money. The problem with Bitcoin, though, is that we still have volatility. Bitcoin got created over here in January of 2019. So again, this is the S&P 500 relative to US money supply. We've got our .com bubble, the subsequent bust, then a slight recovery, and then the global financial crisis where the banks got bailed out. The very first block that got mined in January 2009, it had a message referring to a Reuters article that discussed the second bailout by Chancellor Merkel at the time. So that was in Germany. But since that global financial crisis, we never really saw a real correction in the markets. We did have COVID, but COVID was comparatively small. So again, the S&P 500 relative to US money supply, here we've got COVID, but we had a very quick recovery since then. So during the entire lifetime of Bitcoin's history, we never really had anything major happening to the system. Now, the reason why this is a problem is because we do not know what's going to happen with Bitcoin during a major correction, especially since now more and more Bitcoin is moving towards Wall Street, towards people that just see Bitcoin as another risk on play. At the top, again, we've got the S&P 500. In the middle, we've got the Bitcoin price. And at the bottom, we've got the correlation coefficient of the S&P 500 to the Bitcoin price. So the vast majority of the time, the 1 year correlation coefficient is somewhere around 0.6, 0.7. It tends to get closer and closer to 1. So that means that the two assets tend to move in the same direction at the same time. And so if we see now a sudden sharp decline in the stock market, we are likely going to see another sharp decline in Bitcoin as well. Now, don't get me wrong. I am a fan of Bitcoin. I am a fan of crypto. But that doesn't mean that everything is always smooth sailing. We have to also play devil's advocate. We also have to look at the things that aren't potentially that great. We've already seen how gold is, to a degree, already protecting against monetary expansion. Because even though there are decades where it performs very poorly, over the very, very long term, it tends to just appreciate with the monetary expansion. So gold is already a hedge. And so to a degree, Bitcoin is competing with gold. Even though the volatility is much higher, there are some question marks. So this here is now Bitcoin relative to gold. And in the last 4 years, we really did not see that much outperformance. So this is when Bitcoin hit 63K. This is when Bitcoin hit 100K. And yes, maybe from peak to peak, there was some outperformance. So this is now 8%, but it's not really worth it given the additional volatility that we get. And so because of that, because Bitcoin's market cap is already so high, most people just look for the alternatives in the altcoin market, right? Are there maybe altcoins that are small enough that still have potential upside where you can make the multiple X returns that we saw in the past in Bitcoin? Because in the past, Bitcoin obviously outperformed gold. And while it might still outperform in the future, the relative growth is definitely declining. But then there's the problem with the altcoins. This is now the altcoin market cap, so it's a measure called others. That's a market cap of the altcoins that are not in the top 10 relative to the market cap of Bitcoin. And so if we go more risk on in order to get higher performance, this does not come without risk. So this is an underperformance of 77% since January of 2022. Have a look at those smaller altcoins that might still have some outperformance. This is the performance in the last year. There are 1, 2, 3, 4, 5 winners, and all the rest went down. Altcoins are great when a lot of new people enter the space. When people that don't know much about crypto, they want to get the next 10x returns and they buy everything left and right. That's the time to be in altcoins. But we are not there right now. This overview is living proof. And when we look at the number of searches for Bitcoin here in blue or for crypto in red, it's very, very low. So there aren't new people coming into the space. This is not a retail-driven market right now. Just have a look at the best performers in the last 24 hours on the Solana chain. So this is a chain that's very much retail-driven. It's all micro caps. The liquidity in those tokens is less than $100,000 for most of them. And that's after the rally. So before they rallied like this, there were only, say, 10K worth of liquidity. It was pretty much a non-existent coin. And so trying to make money with altcoins in a market like this, I believe, is a mistake. The underperformance is just too constant. And so I just flip the script around. So instead of trying to find the needle in the haystack, the one altcoin that might perform, I just bet on most altcoins doing worse, as they have done in the past. I've also made dedicated tutorial videos on this, how to win in bear markets by shorting altcoins, and why we might not be in a bear market because Bitcoin is close to the all-time highs, the altcoins still continue to do worse. And so we can hedge ourselves against the macro, right? We can bet on the altcoins doing worse than Bitcoin. We don't necessarily have to bet on an altcoin going down in US dollars. We can just bet on it going down versus Bitcoin or versus Ethereum. And of course, we don't want to do this with assets where there's a lot of attention. We don't want to do this with SPX 6900 or virtual protocol. We want to do this with tokens nobody is looking at. All those constant underperformers. And so I'm sharing the trades that I do in premium. The link is down below. It's thebitcointrader.com. This is also where you find those tutorial videos. Here's a message how I closed my WorldCoin relative to Ethereum short. And in the end, this made quite a bit of money if we apply smart risk management and smart leverage. Just have a look at our members, how they're also making money with the exact same approach. So it doesn't really take that much rocket science in the end. We just have to look at the tokens that get neglected, that have increasing token supply, and that tend to just underperform long term. Essentially what we're doing is we are flipping this screen around. So every red bubble becomes green, every green bubble becomes red. And this works phenomenally in a market where there is no retail interest, because Wall Street doesn't buy those micro caps. This is all just retail demand, and retail demand is low and will likely continue to stay low until we see massive new rallies in Bitcoin again. When Bitcoin is at 150 or 200K, things might turn around. But in the current market, I take the occasional 50, 60, 100% every now and then, and I'm happy with that. And so if you've been losing with altcoins over the last few months and you're looking for a new strategy, then feel free to check it out. It's down below. It's thebitcointrader.com. It's currently $125 per month. The price is lower compared to the bull market. In the bull market, I did increase the price. If you're now locking in the 125, that's your price. So even in the next bull market, when I will increase the price again, you will continue just paying that rate. Whoever signs up for the low rate will keep the low rate. Now, a link to premium should directly pop up over here on the screen. Feel free to just click it. It will bring you directly to the sign up page. If it's the very first time over here, feel free to subscribe as well. I publish this regularly. A like would be very much appreciated as well. See you next time on YouTube, or see you in premium. Cheers.